Welcome to the final day of our final edition for 2023, our Live Trader Showcase. This is a quarterly event. This is Sherry, of course, your hostess, and this is a quarterly event where we feature expert traders to bring you trainings, tips, hints, and insights from many speakers. This time we happen to have 20. Please check out tradersexclusive.com where we put up our posts and our articles and video clips that have nuggets, golden nuggets for you to learn new trading tips and techniques. Before I get started, I do have to do the disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance, of course, is not necessarily indicative of future results. This is our lineup for today. Michael, Daniel, Kenny, AJ, Michael again, Harry, Boxer. Then if you need to reach me, it's support@tradersexclusive.com. And I want to thank our December sponsors. We have blue chip sponsors, Market Taker Mentoring, Hit and Run Candlesticks, and Vantage Point Software, Vantage Point AI, and also Moomoo. Harry Boxer of the Tech Trader is here with us now. Harry is going to be talking to us about mastering technical analysis for successful day trading. And Harry is a 50-year veteran trader and technical analyst, and author of the highly acclaimed Profitable Day and Swing Trading, noted by Stock Traders Almanac as the 2015 Best Investment Book of the Year. A renowned leader in technical analysis, Harry has been widely syndicated and on many financial programs and sites, including CNBC, CBS, MarketWatch, Winning on Wall Street, Stockhouse, Decision Point, and more. A former chief technical analyst and columnist for AmericaInvest.com, Harry's impressive credentials include 8 years as chief technical analyst with 3 Wall Street brokerage firms, and the honor of winning both the 1995 and the 96 Worldwide Internet Stock Market Trading Contest, the Technical Analysis Challenge. Today, Harry continues to educate traders through the Tech Trader, an online platform that allows members exclusive real-time access to his buy and sell recommendations, market commentary, and in-depth research and analysis. You can find him as a keynote speaker at trading conferences across the US and abroad.
Well, okay, I'm just going to do my presentation. I'm assuming you guys can hear me. Thanks for being here, everybody. At TechTrader.com, which has been around for 22 years now, one of the first trading rooms on the internet, I was told. I've been doing this for well over 6 decades, and I wrote a book called Profitable Day and Swing Trading. It's a room with several hundred people in it, and it's basically a day trading room, but I have swing trade ideas that I can put out every day. Matter of fact, I put out 4 or 5 just today alone because of what I'm seeing in the market. I'm going to talk about mastering technical analysis for successful day trading. Basically, how to analyze your intraday trend development for maximum profit. I'm a big believer, and always have been, in pattern recognition. I've studied pattern recognition for over 5-6 decades now, and I believe that intraday trading using 1-minute chart patterns for day trading is extremely effective. Today, you're going to see ideas from today, ideas that I put out this morning, pre-market. Let me explain what we do here at the Tech Trader. Every morning I come in, and I come in early at about 3:45 Los Angeles time, where I live in the LA area. And I do about an hour and a half worth of analysis of hundreds of charts and related news. What I'm looking for in the pre-market is stocks that are gapping up or running on big news. I want 5 to 10 times normal volume. I want something up at least 5 to 15% in price, hopefully more than that. To me, the bigger the gap, the bigger the potential move. I want to see stocks that are thrusting on big volume. I'm not interested in thinly traded stocks They're very volatile and dangerous for my traders. But ideally, what I'm looking for is stocks that in pre-market. For example, if you look today, this morning, at NBI, they had a news that they were going to have an $8 one-time dividend. The stock, which had closed at 7 and change, within a few minutes, it jumped 4 points, 11 and change. And if we go back to the beginning of when that occurred, you will see a pop and a wedge. Now, when I see that pre-market, I'll always alert my traders. And I put a pre-market buy alert. This is the first one I put out. After it popped, I said, look for your first pullback, and let's see if it bounces with volume. Well, it did bounce with some volume right in here. So we went long around the 10 3/4 range. I told everybody you're putting a stop in under 10. 10 1/4 was support. I didn't want it any lower than that, ideally. Here's what occurred. It popped to retest a high at around 12. Settled back into a beautiful little, what I call a pennant or falling wedge. When the volume was low, that's called the low volume ebb. I coined that phrase years ago. It's like an ebb tide, and the tide goes out and stalls for a minute before it comes back in for just a second. That's what you get here at the apex of a wedge when the volume's really low. It's called a low volume ebb, where the volume's really quiet. And once you see a volume come back in again, like we did there, and then it pops. What this did is did a coil. Here's where the volume came in. Trading 16,000 shares pre-market. At that point, a lot of volume. Notice at this point, it was on the verge of breaking out of what we call an ascending bull coil. Now, I've been doing this for a lot of years, and I can tell you that this pattern 2 out of 3 times blows to the upside. So it's worth a shot. Kept coiling, kept coiling, kept coiling. Did it for a couple hours. Finally took a little pop. Testing this high now, right there. Continued to consolidate. It pulled back and tested, but held support. Continued to coil. Continued. Market opened. No, that wasn't even opening yet. Stock popped to 1287. So you're already up 2 points, and the market hasn't even opened yet. Market opens, the stock comes down a little bit, which is normal. Consolidates, breaks back out again. And during the course of the rest of the session, this is what it did. And here at the end of the day, it popped out. It closed at 1335. Well, that's not closed yet. We're still trading. But you can see this is at the high for the day. And it's now 2.5 points off of where we gave it to you pre-market. At no point did this actually break support other than there. I mean, minor support, but the major support on the pullback low here is where I always refer to as your drop dead spot. It didn't really get below that. And then this was the next support. And this was your next support. What you can do, and this is what I keep telling my traders all the time, you don't have to get into a stock or out of a stock 100% at any one time. Always scale in and scale out. Well, if you're going to scale out, you basically put a quarter or a third of your position there. I would then do another at the VWAP, the volume weighted average price. So you probably, for me, I do half and half. So I would stop half at a 1280, half at a 1258.60. But this stock never broke support. It kept going. And right now, as we speak, market's still open. This is 1335 up 597, 80% gain, 28 times normal volume, 9 million shares are traded today. That was the stock I gave early. One of the other stocks I gave out early was ALXO, which pre-market is where it closed on yesterday. Pre-market, it popped and caught and formed that little flag. Let's show you this to you again. This is what it looked like early on. When I came in this morning, the stock had popped and was forming a flag. And I said, this looks awfully good as long as it doesn't break support once it gets above 1020.25. I waited for that. Here's what happened. Here's what happened. So it popped right there, broke out there, formed a flag. Not done yet? Nope. 1262. Now we're in at 1040. You already have 2 points on the stock. 20% gain in a half an hour. It's still going. It's flagging. It pulls back and tests. Note the trend line and the channel that it's formed, a very parallel channel. It's amazing to me that most people aren't aware that stocks will channel up in a perfect angle. Either it's 45 degrees or slightly shallower like this one. But the point being, here it reached 1350 from where we got in at 10 and a quarter. You had more than 3 points here, just like you had an MBI. So if you're in the right stocks, and I try to give you guidance to which ones to go into, and here's what this one did the rest of the day, until right where it is now. Pull back, coil, 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 and it's sitting there at the apex, squeezed to the coil. And it might be coming out right here. The ideal scenario is, and I tell all my people this, if you're in it and you want to stay in it, you're looking for it to number one, hold there. Late in the day, if I'm still holding it, I'm stopping under 1230. So you got a little leeway here. Should it pop late and run, it might spike and get up to the 13, 14 range. And when you have a stock that's this strong, you just don't know how far they're going to take it once it's consolidated for a few hours, sorry. Here's one that didn't work. Why didn't it work? And I'll tell you why in a moment. When you see a stock go vertical, I mean in minutes, from less than 4 to 15, almost quadrupled, quintupled. No, quadruple, sorry. When a stock goes up from 4 to 15, it's almost like 280% or something. And then it comes down. I tell my people, look for the first bounce after it comes down. That was here. It then backed off and held, and rallied again. I told my people to buy. I gave them a buy alert right here at about 10:30. The highest they got was 1144. Now, it was a little scalp if you could have taken it, but you had to be perfect because the stock broke the coil. When I see this pattern develop, the first thing I do is look for where a low might be. That's my stopping point. Right there is where you were stopped. And the rest of the day did nothing. Now, it did have a little bounce in here, but you can see it's in one of these what we call falling channels. And from 4 to 15 back down to 6 and change, a huge give back. But that's what, look, nothing's perfect. We're not 100%. My day trades today were 9 out of 12, 75%. That's a pretty good ratio, and we kind of average something around there. What I want everyone to understand is that day trading is not easy, but it's also doable, especially with my guidance. What you want to do is protect your positions at all times. That 3 out of 12 that we had, all were stopped, but all went lower like this did. You saved yourself a bundle. One of my traders always says, the best trade I ever made is a well-placed stop because it prevents you from losing a lot of money. Curve. Here's a stock that exploded and then formed a little wedgie pre-market. Let's go back in time and show this to you too. I find that the best way to teach people is by showing them patterns as they develop. Now look at that perfect, what I call an ascending bull coil, because it popped from 409 to 489, that's 80 cents, pull back, and actually when it pulled back, it formed a little falling wedge here, a loosely formed one. I don't like loose patterns, but you can see that, and then it popped on nothing, it went sideways on nothing, moved up a little bit and pulled back. So this is a bull coil. So what we're looking for is a move over like 495.6, 495.5 with volume to make a trade. Here's what happened. Pop, and I mean vertical. You had to be quick because if you were in this one at 495.98, in minutes, it was 578. 80 cents in 2 minutes. Now I know, and it's not, and then it came down and bounced, went right back up to it. Ample time to get out and make a nice quick trade that literally were in and out in minutes. Here's what happened the rest of the day. It pulled down, it went sideways, it popped again, and pulled back and formed the coil. All the while, the volume balance of volume and balance of power and volume were holding up very well. Matter of fact, holding in green. So here's what happened: a very, very, very tight coil, and then finally a head down, a snap back up, and then finally it exploded to 593. The gumption to hold this. Note that this did not break the stop right there, even though it came down twice. It held right at that stopping point. So from that point, for 502 to 593, you got 90 cents. Now, again, you got to be quick on these thin stocks. This one's pretty thin. And here's what it did the rest of the day. Nothing. So, and if you were stopped, you were stopped right there. APLT is another great example. It didn't do anything pre-market, and this is one I put out after I saw this run up. It goes from 257 to 297 for 40 cents, and then formed a beautiful flag. When it broke out, that's where I put my day trade on, at 294. Wedge, and continue up the channel. 294 to 336, nice 40-cent pop, about 15%, and the trend is still on. Market's not closed. This one looks good. How about Sava? This one I've been following for a long time. Take a look at this daily chart. You have a left shoulder, a head, and a right shoulder. That's an upsloping inverse head and shoulders with an upsloping neckline and shoulder line. But recently, from October the 13th, when it was 1232, it exploded to about 2 weeks later to 25 and change, almost doubling. Then it came down and bounced and came down and got very quiet and narrow near the apex, the low volume ebb. Look what happened today. It popped out. So this is a great looking swing trade idea that I think gets to 28 and 32. But from a day trade standpoint, where was it a buy? Well, if you look closely, and let's go back in time, this is what it looked like earlier when it started to run and form the rising flag. When it broke out here at 22.22, I put a day trade on it. I told my people there's another popping flag and another one. Continues to channel up, stay with it. No reason to sell this stock. Keep raising your stops below the last pullback low. In this case here, probably the stop is about 22.93. So even if you were stopped out there, you got yourself about 70 cents. However, it just kept going until it sold off, did a nice retracement, and right back up to a new high. Look at this, $25, folks, from where we gave it to you this morning, just over 22. So I can give you tons of examples, but I also want to talk to you about these patterns that you look at are called continuation patterns. I look for them all the time, particularly first thing in the morning. When I see a pop and pull back in a flag, pennant, coil, or anything that's like that, that's a consolidation pattern, that's considered a continuation pattern, because 2 out of 3, 3 out of 4 times, those patterns continue the trend once they break out. Like even in this case, if you looked at that, it's kind of a falling wedge. Once it broke out, the trend continued. Well, guess what? It formed another one. There was no time in which the stock broke support. Didn't break that low, that low, that low, or that low yet. So you're still in the trend. People always say to me, you know, Harry, I sell it too early. Always sell too early. Why? Well, 2 things. Number one, you don't need to sell everything all at once. You can always sell half your position and ride with the rest with house money if you're making money on it. Or just keep raising your stops. You don't have to exit until either you're taken out or you think it stock's had enough. Where's my target here? What does it look like to you folks? 25.5, 3/4 would be my target. Well, that's where we are right now towards the end of the day. With a half an hour to go, it might very well spike up to 25.5 or better. So in the morning when I come in and I spend an hour and a half going over, so just so you know how it works in my room, I spend an hour, hour and a half going over dozens of charts. I prepare a focus list. I publish that focus list in my room every morning. This is what the room looks like, by the way. You'll see all kinds of people. All kinds of people in here making posts, mostly me, but a lot of my people. In the morning when I came in early, I started putting up day trade alerts. AMD, PARA, ALXO. Let's just go over those three. This is before the market opened. As you can see, at 8:54, about 35 minutes before the market opened, 40 minutes. I'm putting out pre-market day trades. What did AMD do today? You'll see that when the market opened here, AMD popped, pulled back and tested, and then ran hard. A lot of us, once I saw this thing cross over the moving averages, we went long about 128.75, and it got up to 131 nearly. Then had a 1, 2, 3, 4, 5 wave corrective falling wedge. I told everyone in my room, as soon as this crosses the moving averages right there, it's another buy for a run back to 129. Well, it got to 129.46, pull back, and even now, towards the end of the day, AMD is up just a fraction, but consolidating bullishly so that if it gets above 129.5 again, it could run to 131 by the end of the day. Again, we're running out of time. We have 30 minutes to go. But AMD didn't have as good a day as some of the others. ALXO, we went over that earlier, I believe. No, I didn't talk about that yet. So pre-market, it popped from the flag, exploded from the falling wedge, popped up, pulled back to test, ran up. You can see that in the morning it had a beautiful rising channel. But I'm also an Elliott wave, not expert, but aficionado. I think I know a little bit enough to be dangerous. I believe that anytime a stock has 5 waves up in the morning, 1, 2, 3, 4, 5, it's an exit point. It turns out that was the high for the day. It's always around 11, 12 o'clock where that occurs. And then you can see what it's doing now. Now it is forming a large coil over the last few hours, so it might pop again. Let's see what the indices are doing. Holding up right at the highs for the day. What a wonderful comeback. I noted to all my subscribers there was a falling wedge early in the morning, and if the wedge broke out, we would probably come up and retest the highs. We've done that. And now they're consolidating near the highs and holding within this rising channel of the last 3 days and at the highs of the morning on both the S&P 500, which is here, and the NASDAQ 100, which I follow these two closely. Paramount, another stock that I put out this morning, and here's why. I'm always looking for pre-market movers. So this one yesterday closed at 15, and there was some activist action on this one. Just check out the morning pre-market. I want to show it to you. That's what it looked like when I came in this morning. Enough for me to say, the way this is trending, pop, wedge, plop, flag. If it broke over 16, we were going along. It popped, but then came down and then exploded right after the market opened. Hang on, very sensitive here. So it popped sharply, literally from 1573 to 1664, about 90 cents. Pull back and wedge. When it broke out of the wedge, I told everybody we should stay long and keep a stop under 1590. Look at that run. Then it flagged, coiled, kept coiling, still coiling, came down, was hanging tough. I had a target at 17, the high 1722, and then it pulled back down. It's trading 1692. But this one's holding up very well too. This could be either a late trade, an after-hours trade, or follow through for tomorrow. You know, continuation patterns are what we look for early in the session. They work best. They're the most reliable. The best part about being in my site, folks, is not only do I do a live webinar pre-market, because in the market pre-market around 8:10, 8:15 every day Eastern, I'm on with a live webinar doing just like you're watching today's webinar. I use GoToWebinar. You log in, you see me charting, drawing my lines, doing my thing, and you'll hear me give you my take on each pattern, where I think the stops are, the targets are, where the trend lines, moving averages are, all of that. I give you very detailed buy alerts when I do. I give you again, the targets and the stops on each trade. I do the same with swings. My swing trade service is also available, cheaper than the full access day trade service, of course. But it's something where I send emails out on the swing, so you get a pretty quick, immediate notice. Everyone asks me, well, how and where do I draw the trend lines, the support lines, the resistance lines? How do I do that? Well, you know, it's amazing to me how stocks tend to form the same patterns over and over, even on 1, 5, 10, 15-minute daily charts. They're all the same. They're coils, pennants, triangles, continuation patterns, you know, inverse head and shoulders, regular head and shoulders, you know, double tops, triple bottoms, whatever. You got those kind of patterns forming all the time. If you know what to look for. Now, I draw the lines because I want everyone to see them, but I see them before without drawing them. And as long as you have those kind of patterns in your mind, you can do very well. Let's look at another one. AAOI. Now, I've been following this stock for a while. I actually have a swing trade on it. Why? Because if you look at the overall, well, first of all, we first went in long on this stock at about the 3.5 range. It hit my target at 5.5, pulled back, and I put another swing on, and it went to my next target at 10. It actually reached 12, almost 11 and changed, 11.5, and then it pulled back and broke out. We put another swing on it. When it broke out here, we got another swing on it. I mean, this is the one stock that's done very well for us. And even today, it set a new, the highest level, going all the way back to 2019, a 4-year high. Now with this base breakout and pullback, it's a large 1-2. Wave 3 is underway. And I'm not kidding when I say this could be a $40 stock. Double from here. We shall see. Don't forget where this stock was. Over 100. Believe it or not, they took it down to $2. $1.49 from 101. I mean, it's about as ugly as you get. 1, 2, 3, 4, a big fifth wave down, triple bottom base, breakout. I mean, to me, folks, I've been doing this so long, it's second nature to me. You know, for the amount of money I charge for my site, everyone thinks I'm crazy, but you can make so much money just in a trial and pay for a full year in advance before you're even done with the trial. Folks, in my firm, in my place, you can come in for 2 free weeks, 2 weeks free, or a 10-day free trial. No credit card necessary. Today, we're offering something better. For those who sign up today, you can get 20 days free. And we'll also have a special drawing to give away a 2-month subscription for free. That's a $478 thing. We'll give you some more details a little later. So AAOI, a nice day trade, and it's also a swing trade. I like to do both sometimes. Here's why it was a day trade. I want to point this out to you. So I've been watching this stock and watching it. It was this chart of the day. And then it went this morning, popped through the double top and formed, look at this wedge it formed. Right there. When I see a breakthrough, a double top with volume too, and then a little bit of pullback on low volume, forming a wedge, I tell my people, oh, this breaks 1860, we're going long. Now, I don't know how much money it would have made today. Let's see. It got up immediately to 1910. Then it went to 1940. Late in the day, pulled back. And then it's coming right back up again to new highs. 1980. Almost 78. So we're in at 1860. It's 1978. That's $1.1520. It's about 9 or 10%, but the stock still hasn't gone down. And with 22 minutes to go, you can see that stock is just breaking out again. ARVN, late in the day today, not late in the day, excuse me, early in the morning when this thing popped and formed a wedge. Let's take a look at it. It's amazing how often they'll do that. Pop and wedge breakout, we went long. Then what did it do? It formed a little pennant and popped out. Did it break support? No. In a stock in a rising channel, you want to stay with it as long as you can. Another one. then a sideways action and a pullback. You may have been stopped right there. Some of us were. Look what it did, comes right back up, and now it's forming a coil again. Having a tough time getting through that, but net, look at this daily chart. You can see why there may be some profit taking. This stock has gone from 14 to 37 in about 5 weeks. That's what I'm talking about. AI, we all know that one. Here's where I was interested in this one this morning, and I put out a day trade on it. You see this coil in the pre-market? Look what it did when it popped it. When this thing popped, I immediately said, I'm not sure it's going to pull back. I think if you just go long, and then we'll see what happens. It literally went from 26.5 to 27.60, pulled back, double topped, got up to 28.30, and now it's coiling in a falling wedge. But it did break out late. It made a new high. But at no point did it break below this support pullback right here. Now, it may have taken some people out because I know that a tighter stop would have been right there. But you probably are stopped out. But there's no reason why a stock that you just got stopped out on and then breaks back out again, you shouldn't go back into. I tell that to my people all the time. It's like you sell a stock, and that stock, I'm never going back in there. That cost me whatever it cost you. But the point, some of my best trades were when I got stopped out, I went right back in when it broke back out again. In this case, I would have gone right back in here about 27.10, and sure enough, a couple hours later, 28.62. Time after time after time. So, where to draw trend lines? Trend lines are always drawn across tops and bottoms, and usually what I look for is parallel channels on a 45-degree angle. For example, in this instance, I'm looking for this angle of ascent. And a 1, 2, 3, 4. So I'm looking for a 5th wave up because most Elliott wave patterns do have 5 waves. You can see it's drifting down a little bit. And I also don't like entering late trades. In other words, we got 18 minutes to go. Why would you trade a stock? Unless you think if you're already in it, you can stay in it. But to enter a new position, I think is crazy. I think you have to be too greedy to start trading just a few minutes before the close. Here's one, AMRX. Same thing, pop flag and breakout. I ran up, pulled back though. Didn't quite get to my target, which was there. So, it could have been a failed trade, but you were stopped right there. See that one bar? That's all it takes is one bar with any kind of increase in volume to really change a trend. And that's a philosophy of mine. So again, how do you draw trend lines? Well, it's easy. Stock pulls back, runs up, note the rising tops. Pulls down, creates your channel. What happens here? You're out. Once you break a trend, usually you're stopped, or you should be stopped. Upstart, when it exploded and formed that little wedge, we went long and then popped and retested it. But from that point at 34.70, it reached almost 37. And then it came down and made a new high. ARM is a stock we looked at this morning, pop and flag, breakout. And from 63 and change, it made up to 66.5. That's 3 points there. Then a perfect coil and held support. And then a run up to 67 and change. And then no reason to be out of the stock as it continues to trend upward. Again, how do you draw lines? It's easy. You draw a trend line off the lows and tops and bottoms, and they're usually hopefully parallel. Look at this. And then set your eyes back here and draw a parallel channel or close to one. And look how it's held all the way up. And now my late spotted target on an angle a little bit. Always give yourself a little bit of an angle. I have to say 60, near 68, 67.90. And then if it gets through there with lateral resistance at 69, I would say, 67.90, 68, and then maybe 69 or 68.90. Either way, where would I put a stop? This isn't rocket science, folks. Take a look. 1, 2, 3, 4, 5 times. And held that level. What's that level? About 60, 66, 70, 75. So that's where you stop it. At the end of the day, if it spikes up to 67, 90, 68, and you want to sell it, because I believe in day trading, I believe getting in and getting out before the day's over and being in cash. It isn't worth it overnight to get one gap down. It can take a big chunk of your portfolio out. So how and where to draw trend lines, it's not rocket science, but it is important how to set targets. Now, I set targets based on several factors. You see these red lines that go across here? They're old highs. You can look at the daily chart. You'll see there's an old high. So usually when a stock pops like that, comes way down, anytime it approaches that, that's called overhead resistance. So if I see a line that's overhead resistance, I'm putting a target there. I'll also take the trend lines and draw a channel top and say, okay, my two targets right now as we speak is 68 and 68.95. That's how you set targets. And how do you set a stop? We just said that below a certain support level. For example, in this case, that was a stop. We raised it there. We raised it there. We raised it there. Still hasn't been stopped out, has it? That's how you stay in a trade. Maximize your profits using technical analysis, folks. Successful day trading based on pattern recognition and knowledge of technical analysis is the key to trading. The only time I pay attention to fundamentals or any news whatsoever is pre-market. I want to see why the stock popped. Then the rest of the day, I'm looking at it technically to tell you what the trend looks like, whether it's extending, whether it's pressuring support, what the volume looks like, where support resistance is, where you should be raising your stops all day, particularly when we get a runner that's really running hard. Like we had a stock the other day that went from like 4 to 30 or something like that in a day. And we got in at 14, that's all. But we rode it all the way up to the high 20s and doubled our money. More importantly, I kept saying, raise your stop to here, raise your stop to there, and each of those stops were based on this. Raise it there, raise it there, raise it there, raise it there. And a stock that's channeling like that, you won't get stopped out until you do, which means either you have a choice at the end of the day, like we're coming up to it right now, to exit there, or if it rolls over, you stop there. And finally, we talked about where to place stops. Stops are a function of risk management. And you have to have stops. And I don't believe in 8% stop, 15% stop. I don't believe in a percent stop. I believe the chart will tell you where support is. And logic tells you that if a stock is held, and then rolls over and breaks that, let's see if we can give you some examples. Well, here's one, same thing. If I'm an MP after I saw this falling wedge, and say I went long MP, which is the second largest rare earth company in the world behind China. It had a really good morning. It came down. When it broke back out and did this, this, and this, and then ran up, that's where I set my stop, right there. So when this thing rolled over, you were stopped right there at 1690. And here it is at 1675 and drifting. No reason to be in that stock as of this moment, especially with 12 minutes to go before the close. So that is basically where we're at in terms of what I believe in and how I use technical analysis and mastering technical analysis every day for successful day trading. When you come into my trading room, I give you guidance all day. You have the ability to private message me at any time with a question if you're shy or don't want to put the question out in the room. But I always tell everybody, please put the question out in the room so that when I answer it for you, other people can benefit from my analysis and my recommendation on a certain stock where the support resistance targets might be. So come to techtrader.com. This is me, and that's my website. Just go to start a free trial. Put your email address, your first name, last name, and a phone number in. Create a password. That's all you need. No credit card required. I want you to come in a room for 10 days, enjoy what you get, full access. Every day I do a charts of the day video. On the weekends, I do an hour-long weekend webinar that covers 100 stocks, all the indices, the technicals, the ETFs, and even some shorts. They don't call me box of shorts for nothing. In any case, that's my presentation today, folks. And I'd love to have you come join me. Please do that and enjoy your time with us. For today only, if you do sign up today for a free trial, that's all you have to do. You'll get double that, 20 days for free, nearly a month of juicy stuff at techtrader.com. You should be able to make enough money to pay for my services for over a year, maybe two. I hear that all the time. So that's my presentation for today.
I want to thank everybody for being here with us today. It's been a great 3 days. I hope you'll join us again in 2024. I want to thank our sponsors for December, Market Taker Mentoring, Hit and Run Candlesticks, Vantage Point AI, and Moomoo. We really appreciate that. It's going to make a difference for what you can see in the future. And this has been a presentation of tradersexclusive.com.